We're going to talk a little bit today about venture capital and the world of money here in Indiana. And I personally started a company called Vibenomics. I've raised just over $20 million, just keeping oxygen in the plane, as we like to say as entrepreneurs. And a lot of that is from a couple of the gentlemen sitting here have participated in that. And then we have a couple folks on the panel that are similar to myself, that we've had to go through all the trials and tribulations of raising capital and bringing it into Indiana. I also had the opportunity to start a car wash business here in Indiana. So I like to plug that, because I used to say, come visit my car wash. Now I'll say, if you'd like to apply, we would love to have you work at the car wash, because I can't find anybody to work today. So I'll throw that out there. But we're going to get started, and I'd love for you gentlemen all to take your time and introduce yourself, because fascinating backgrounds, and I know most of the folks here know you, but we'll start here.
Sure. Matt Hunckler, founder and CEO of Powderkeg. Started as a grassroots organization here in Indiana in some way, shape, or form over a decade ago. 3 years ago, founded a technology business and raised some capital from some local investors like Elevate and some not local investors. And we're fortunate enough to have thousands of startups in our community that we've seen get funded, get acquired. I'm sure you've heard those stories here today, and super happy to be here.
Don Aquilano. I'm co-founder, managing partner of Allos Ventures. It's third VC firm that I've been part of since 2000. So we focus on Indiana and the Midwest. We work with other investors like Elevate, and we invest in early stage tech companies. So glad to be here, and thanks for hosting.
My name is Darye Henry, founder and CEO of AfterSchool HQ. Our goal, what we do really is focus on getting more students in after-school programs. We do that through a technology platform. My background is just in software. Started as a software developer, went on and started my own consulting firm in software as well, but also served as CTO for a number of startups here in Indiana and beyond as well. So yeah, so that's my focus, technology guy, startup entrepreneur.
Good afternoon, everyone. I'm Chris LaMothe. I'm the CEO of Elevate Ventures. I was trying to figure out what to say about my background, because it's been incredibly eclectic. But suffice to say that I started out as a cookie and cracker salesman, and I moved through the Indiana Chamber of Commerce, ran a high net worth firm, started my own private equity company, and bought multiple businesses and run those businesses, and now I'm running Elevate Ventures. So it's been a great ride.
Absolutely. Well, it's great to have and be able to talk with all of you today. Chris, I'm going to jump in mainly with you being the most active investor in Indiana, and also having ties to Indiana themselves and working through that. And I don't want this to be a session where we sit up here and whine about capital coming into Indiana, because certainly it has changed dramatically over the last several years. We are starting to see an absolute influx come in, and it's been fantastic, but we still are on a little bit lagging behind a lot of areas. So I'd love for you to talk a little bit just about what you're seeing and what you're doing to bring some of that capital to Indiana.
Yeah, thanks, Brent. It's interesting. I know it's hard for you to believe, but I've been around a little while, and I was here when it was India no place, and it really was India no place. There was nothing going on. And there were some early pioneers that started some tech companies like Scott Weber and a number of people like him. And there was no money really in Indiana. Everything was outside of Indiana. And as those firms started getting bought up, then the discussion began. How do we go about starting to find capital to invest within our state? How do we keep our businesses longer through the cycle of growth, and then not lose our headquarters to other states? And so Indiana, over the last, really, you're talking about 30 years ago, when we really began kind of innovation and entrepreneurship, from my perspective, in Indiana in a serious way. Now, 30 years later, we've made some great progress. And during that 30 years, the progress growth has been kind of like this. We're still so far behind where we need to be. We've made a lot of progress, particularly over the last 10 years. Organizations like Allos and High Alpha and a number of other entities that are starting up. In the last 3 years, there's been more and more private sector companies moving into the kind of the seed and early stage space. Elevate operates at pre-seed, seed, and early stage. Where we have a challenge, I think, is in the later stage investing. And part of that is because of our ecosystem. The reality is, when you look at most of what's going on in Indiana in terms of innovation and entrepreneurship, it's at the pre-seed, seed, and early stage level. We don't have a big pipeline of a lot of late stage companies that are attracting capital to Indiana or encouraging others to pour more capital in, but they're coming because the pipeline is growing in this pre-seed, seed, and early stage area. Elevate Ventures now has close to 500 companies invested across 15 different funds that we manage, all in the pre-seed, seed, and early stage area. And now we're beginning to see more and more of those begin to move up into later stage deals. And that's where we need help. But I will make a prediction. I will say that within the next 2 years, I think you're going to see some bold, aggressive moves by Indiana to encourage even more capital formation in our state and attraction of capital to our state. And I'm really, really bullish on the trajectory of where we are now. Having said that, I also want to set the stage and say venture capital in Indiana, we're right at about 1% of all venture capital in the United States. We have such a long way to go, but the momentum is building, and a lot of it is built by, I don't mean to embarrass anybody, but Don has done, I think, a terrific job with Allos and the funds that you've put in place and the commitment you've made to Indiana, and now more and more people are kind of following that and moving into that space. So I'm really bullish. I think the next 2 years are going to really blow people's minds, and especially as we begin to see more and more activity in later stage entrepreneurial activity and investment.
Yeah, I agree. We are currently in Series B looking for a very large round that prices us out of Indiana. It's $30 to $50 million that we're looking for, and it's very difficult today. But I think with the exits that we're seeing and all the capital, people are making bets in Indiana and they're winning. That's going to also play into it. Matt, I would love to hear, because you travel outside of Indiana, you get to work with entrepreneurs and different VCs around Indiana, and we're always comparing ourselves to Kentucky and Ohio. What are they doing? And how do you feel Indiana does against our neighbors and folks around us?
Yeah, thanks, Brent. I used to travel a whole lot. These last 18 months, I've stayed put for the most part, other than an out-of-state wedding. It's been really cool to see just that huge shift, right? Spent the previous 10 years up to the pandemic, hitting dozens of cities all over the country, all over the world, plugging with startups there. This last 18 months, I've got my upstairs office and I've got my downstairs office.
Right.
And I've still met with hundreds of startups, dozens of VC firms, probably met with more investors in the last 18 months than I did in the previous 8 years. And that's because there is a huge interest from investors on the coasts to invest in the middle of the country. To Chris's point, we still have just over 1% of venture capital here in Indiana. 75% of venture capital still goes to just 3 states, California, Massachusetts, and New York. And the other 47 states fight over the remaining portion of the VC funding. I think that actually gives entrepreneurs tremendous power right now because the market has shifted so much in the last 18 months. The companies in the middle of the country are much more undervalued than they are on the coast, which is why VCs want to invest in them. They're more capital efficient companies because historically we've had to be, because there's not as much access to capital. I think there's a lot going for us right now, just in terms of like the narrative that's being told in the country on top of all of the successes, right? We're having all of these exits. I think you heard from Brian Powers earlier today. All these companies wanting to set up headquarters like Ironclad, now setting up their Midwest headquarters in the middle of the country. JobVite moving their headquarters here in Indianapolis. This is not like a story that I have to tell anymore. It's a story you can just build on.
Right.
And so it's really, really cool to see that. That said, it's still hard if you don't know how to connect. And I think one of the things that Elevate has done, and I know personally with Elevate, I know secondhand from folks that Don has invested in. Allos does this as well as a lot of the other VC funds in town. But Elevate in particular does a great job of building relationships with other VCs, not just here in Indiana, but outside the country as well. And to have those known brands like Elevate Ventures, which carries a lot of weight outside of Indiana. Mm-hmm. In our friends and family round, we had a VC that said, "Oh, Elevate is in, we're in. No diligence, check was in the bank the same week." That's awesome. I mean, so everyone's doing a lot of work to do this. It's a rising tide, but I still think we're at the very early stages. Now, you rewind back in 10 years, a lot has been accomplished, but I think there's so much more potential that we can tap into here to get companies like yours the later stage growth funding.
Yeah, I agree. And we talk about Don and High Alpha and Elevate kind of being the catalyst of a lot of those things that are happening around here. And I think we've done an incredible job at that first set, that seed round into A round. And we do such a magnificent job of that. And it's only gotten better and better and better. Don, you continue to really be able to, and we were kind of laughing not too long ago that, when it's almost like you have your own classes you come in with. So, Max and myself, and we all kind of came in the same time. And then now all of these people that I hear their names all the time, I have no idea what they do. You have always stayed true and continue to invest most of those dollars into Indiana companies. What makes you continue to stay right here and keep investing in here?
So what's interesting about that, and it kind of builds on what you were saying, Chris, I've been investing since 2000. So we're seeing a lot of progress, but we still feel like, hey, there's a lot more to come. But if you go back to 2000, and I'll get to my point in a second, what did I see? I saw that, I actually started making a list. Here's the things that didn't exist then, right? When I first started to invest: TechPoint, BioCrossroads, 16 Tech, Launch Fishers, other co-working spaces that we talked about, Developer Town, Speakeasy, G-Beta, Matchbox, Powderkeg. Matt wasn't even born, probably. Upskilling orgs like 1150, VCI tax credit, I'll get to that in a second, High Alpha Studios, Next Level Fund, multiple big bangs. Software artistry was the only thing that happened. And this creates an incredible virtual cycle, right? What software artistry gave birth to was incredible. Not just it created wealth for CID, which was one of the only venture firms at the time, locally. It created experienced entrepreneurs. So folks who were on the ground floor became managers. Folks who were managers became VPs and directors at the next startup. Folks started companies. How about a Primo? That came out of software artistry. Over $500 million, it became another big bang, right? So that's spectacular. Now, look at this, 20 years later, talk about some of the big bangs, right? Interactive Intelligence, Angie's List, Rix, Passageways, Amplify, PackSafe, Suros, Socio, Lessonly, Primo, ExactTarget, eTapestry, one of the first SaaS companies, right? So the fact that I had to stop and think about all of these sort of big bangs, if you will, is incredible progress that when you're only in it for a little bit of time, it's kind of hard to notice sometimes. It feels almost normal right now. But this is, and so when people say, what's changed? How about Orr Fellowship? How about this organization? How about all the stuff that's going on in the universities? Not just the academic side, which is teaching a lot more entrepreneurial finance, entrepreneurship, but all the tech transfer stuff. Go up to Notre Dame, that whole idea center, that wasn't there, right? The other thing that excites me about continuing to do this, we've always had the Hoosier hospitality. Okay, so we've always had that. Somebody mentioned that before, which is a godsend. Benchmark Capital, one of the premier VCs in the land, has invested in a tech company here in town that we're in together. And at a board meeting, he mentioned, I wish this management team ran all of my Silicon Valley companies. This included Uber, Twitter, OpenTable. I mean, go down the list, right? But what we've started to see is some mojo and some moxie, right? You don't want a quick flip. You want to build a big business, right? Mm-hmm. So do you, right? We're backing companies that are looking to build. When they see the exact targets, the Primos, Lessonly, I forget whether they mentioned the numbers. It's hundreds of millions of dollars at that exit, right? That's what keeps me motivated, because even though we may still be 1%, it's when people say, hey, what's changed since when you first got here? Everything has changed.
Yeah, no question. No question. It's been a fun ride to be a part of it, because the other thing that I would add to that is the folks that have exited and the VC group that we have supporting does an incredible job of connecting us as family. I mean, and the folks in this room, but you continue to just build on top of one another, which I think is really, really fascinating. So Darye, I know, we got to talk very early in my career. You were a huge help to me as I was launching. You were one of those companies and people that had already been there, done that through the space and kind of helped me start thinking about building my product. But I'd love to know just your experience in raising money and how it's been here in Indiana for you to raise money.
Yeah, I think Hoosier hospitality, I mean, that's exactly what I was thinking is, from the people I've talked to, I've never met anyone in the ecosystem that's too busy to help, too busy to have a conversation, which is quite amazing when you think about it, right? Like you can sit down and talk with a number of different people. And just like you were just mentioning, like the ecosystem in, pre-seed, seed stage, it's actually pretty robust overall. And just thinking through like, some of the interactions I've had that have made that possible, one would be Powderkeg, right? Pitch night, the ability to get out there and just get practice and do that. Launch Fishers, which, John Wexler, which is a mentor of mine, but he invited me back in 2013. Before that, I was in an isolated office, right? Somewhere on the west side or maybe in a Starbucks. Being able to get out, meet other entrepreneurs, universes collide, right? A lot of good things happen. Even Elevate with the Entrepreneurs in Residence program, which has been awesome. Like I met a couple people in there. They built the pipeline, right? And it really helps you get prepared so you're not just, out there on your own. And even with Allos and what you guys are doing with 68 Capital, and that's been a great resource, even on the underrepresented side as well, just to be able to get access to capital and understand what those processes are. I think overall it's I'm not saying everything's not easy, but it's accessible. Mm-hmm. And as long as you stick to that. I think one of the things that overall, like as I've learned, when you're on the other side of it, so we've already raised a good amount now. So it's like, oh, okay, I get it. But when you're on the other side of it, you're like, man, what am I doing wrong? You know what I'm saying? Yeah. Like, what do I need to do better? How do I get better at this? And I think one thing we can do, I love all the partnerships that are happening. The fact that Allos is partnering with 68 and Kelly Jones, because there's some things you can't always be aware of every opportunity, right? Like, it's just certain things that certain people know, right? Because they've experienced it in a different way. And so being able to partner and work in that way helps you see things that, oh, you know what, I wouldn't have been invested in this company or saw this opportunity, but I can see that that's a much bigger market than I understood. Or I can see there's a bet to make in this entrepreneur that I may have missed. And so I think when you increase diversity on the investment side as well, it helps you identify people you may have missed. And so, and I'll just mention one final thing about that is, sometimes it's really easy to identify, like, I can see where somebody is. Like, you can look at me and say, hey, he's the, CEO of this company. He's done something to get there. But sometimes the thing we miss is the distance travel, right? And so when you think about underrepresented, or maybe in some cases, it turns into underestimated in a way sometimes. And so, but if you would look at what it took for somebody to get to that point, sometimes they may have traveled a very long distance, and the amount of grit that they need to have is very different, right? Like, you can meet somebody who's like, yeah, this guy's the CEO, but you meet somebody else who came from, a very far, very distant background and got to that same point. There's a story to be told there about grit, and, especially of that being one of the key signifiers of success in that. So I think, like I said, going back to the experience, it's been hard, but it's been great at the same time. And I think things are improving across the board for founders.
Yeah, I like that. And I guess to stay there, and Chris, I'll go back to you on this, double clicking into that a little bit. But to Darye's point is, there's folks that maybe have a longer road to go. And I know we've made a point to start finding and investing in minority-owned businesses, that type of thing. What's Elevate doing, and more importantly, I guess, what's the state doing to help encourage that and continue to do what we're doing?
Yeah, well, let me quickly just shout out one of my partners who's here, Jacob Spock, who not only is an EIR, but he also runs all of our entrepreneurship services. And we have now partnerships throughout the state and entrepreneurs throughout the state. And their whole point is to take anyone who has an idea. Now, we do focus in high potential, high growth businesses, and that's where our space is. But we love working with people. And frankly, to be honest with you, one of the biggest challenges we have are people open to listening to different ideas and to thinking outside of the box and following through with things that need to be done. Because the reality is, if you're an entrepreneur, you're so focused on your product, your service, your market, your customers, your IP, all those things. But there's still such a criticality to your success of being open, particularly to investors that come in. And generally, those investors have a lot of experience, knowledge. They've done this again and again and again and again with so many companies, so they kind of know where where the pitfalls are. But you have to be open to listening to what those pitfalls are, and then understanding how do they relate to you, and then how do you get around those. And one of the privileges I have being with Elevate is that we've got a really seasoned, hardworking, very passionate group of entrepreneurs and residents who have done it, did it, and are helping a lot of people and can cut the learning curve so quickly that it really allows people to jump forward. And I do think that that hands-on services, kind of maybe to your point, the hands-on assistance to help people accelerate their timeline is critically important as companies move into fundraising.
Yeah. So. Yep. I'll dive in a little bit further too with you, Don, and hearing all the different ideas and being open to it. At some point, a VC has to pick their swim lanes, and I know we've even had discussions of in and out of swim lanes, things like that. So, where are you starting to see a lot of the capital going? What do you see happening in Indiana? I know, MarTech became a really big thing. Ad tech kind of went out. Now we're getting into biotech and ag tech. And what's coming, and where are we putting all that money?
Yeah, so the beautiful thing is, all of these sectors that are core to Indiana, again, going back to 2000, Agronovis and BioCrossroads and 16. So the support ecosystem around those are all improving, right? And therefore, it makes startups stronger and it increases the number of startups. It also brings in capital, whether it's local or not. What we're seeing in one of the strengths in the areas that we look at, obviously software as a service, MarTech, et cetera, right? Where you can actually build these businesses relatively capital efficiently And we've got a lot of experience from all those sort of big bangs that we talked about. We're starting to see a little bit more in, call it the deeper tech, pragmatic deep tech, right? Which is a little more around machine learning, sometimes supercomputing, AI in a pragmatic way, right? It's easy to pour those terms over everything like ketchup. But at the end of the day, it's sort of like, what problem are you trying to solve and what role does this play? And so we can build upon the experience that we have in our different verticals here in the state and our strengths from just industry, including the customers that we're surrounded by, but also building upon that with sort of deeper tech. And so that's what we're really kind of watching and seeing more and more of, which is kind of beautiful. It's sort of a foundation of our strengths, but also leaning forward. And I think a lot of it comes from that sort of mojo, right? For a while, it was sort of like, let's be cautious and careful and kind of stick with what we know. Now it's like we can build anything, right? And we can build big, differentiated, powerful companies with big moats that solve big problems, and we're going to do it in a big way. And that's kind of what we're seeing.
Yeah.
Can I add something?
Yeah,
to that?
please.
I heard you ask that question. I thought of it a different way. Where's all that capital going?
Yeah. And
then connecting a dot to the question that you were asking Chris about our diverse ecosystem. And I think those two things are so related, and it's just a thread through everything, right? Where's the capital going? 70 to 80% of every round goes directly to talent, hiring talent. And what I'm seeing with the pipelines of talent in Indianapolis is that it is much more diverse, with programs like 1150 Academy, with programs that like Ivy Tech and Kelley School of Business are doing. There is so much more diverse talent coming into the ecosystem because of the VC funding. And because these companies want to build more diverse teams, there's more of a conversation around it than when I first came to Indianapolis. And I think that's really exciting, because that's where the journey started for me, right? I got to work with Mark Hill and then Scott Jones before doing any sort of venture-funded business of my own.
Yeah.
And so it's all connected, right? And I know there was a panel this morning on talent attraction and talent retention, but like just trying to connect the dots here at the end of the day, back to the beginning of the day, 70 to 80% of every venture round goes directly to hiring talent.
That's right.
And that's what we see at Powderkeg, because we're a talent platform. But that's why we build relationships with VCs.
Yeah.
Is without the capital, they can't hire the talent. Without the talent, they can't grow. Without growth, they can't exit and then reinvest back in the community.
Yeah, that's a great point. And to the point that you're making now, matched with what Don said earlier about if I could hire this talented management team, and you hear that a lot about the companies that are here. When we go to hire a vice president of sales, or we go and hire a vice president of customer success, they cost us X amount of dollars. That same person to build and do that out on the coast are about 2 to 3 to 4 times as much. So payroll goes through the roof. So when VCs think about investing in Indiana, they are finally recognizing that you can build a really fantastic team that's a solid living here that's totally different. So one of the things I wanted to touch on before we stop, and I'll take questions here in a second, but Darye, just as COVID hit and things happened here with the complete change in the dynamic of how you go out and raise capital. This kind of happened to me as I was starting, where most of my meetings, I'm sitting out here asking for millions of dollars over a screen with somebody I've never shook hands with or done anything with, and they're supposed to trust me. How are you, or how did you manage through all that time raising capital? Did you work with other people doing that same thing?
Yeah, it's really interesting. I actually found it efficient and kind of nice. You know what I'm saying?
Love those flights.
Because we got, we can do more meetings, right? So we got to meet a lot more people, have a lot more discussions, conversations. And nobody held it against you, right? Like, oh, I didn't get to see you in person. I didn't get a chance to shake your hand, which is still meaningful. But I found, that's when we actually started raising, was during right in the middle of it, right?
Mm-hmm.
And so I think it's been good. I think ultimately, you don't want bad things to happen to cause good things to go on. But I do think it's pushed us into a world that's enabled capital to flow more freely, actually. And again, there were deposits made where I didn't have to go and, meet anyone in person, which is very, very different.
Yeah.
If I could add to that, we, in the middle of COVID, we made our first ever investment in a company where we met in person nobody from the company, right? And it was odd. We did end up, I think, having more meetings sort of over Zoom, but it was sort of liberating. We went outside. It was a great company. We had reasons, we had relationships, but we'd never met. And it was in Nova Scotia. So it was outside of our geography, but it didn't matter. It sort of is the way we were thinking about it. And I remember
that's not Nova Scotia, Indiana, right?
Not Nova Scotia, Indiana. You probably have one of those, right? Right. So, yeah, and I remember even, it was funny, one of the questions, they said, any other questions? And I was looking, I said, are you tall? Like, I don't even know if the CEO's, probably taller than me, but I don't know if they're tall. So,
so Don, talking about that, because that's interesting, because flipping that around now, you're also looking for deals. You're looking for the best companies, the best deals. And now it makes it easier for myself, where I used to get to meet with you and I really wanted to meet closely. So now as somebody starting a company, I can get on Zooms and have meetings and not really depend on Indiana investors. How does that affect you and how are you combating that?
Yeah, no, we're having a lot of Zoom meetings, but at the end of the day, if possible, we want to meet in person. Mm-hmm. At the end of the day, we're all human beings, right? And we don't all need to jam into a tiny room and have all in person, but we're trying to have many of our board meetings in person if we can. Mm-hmm. We like to meet them in person. We like to meet the teams in person. So we're doing our best to do that, but you're right. It's become pretty easy and relatively efficient to do a lot of the work without actually me driving to, drive to Fisher's to meet with you at your office, right? So it has changed the way we think about it, but at the end of the day, we really do want to meet the people sort of. We just had our annual meeting at the last minute. We ended up doing it virtually, which really bummed me out. We actually tried to model it after yours, which was kind of a hybrid, right? Yeah. Which was interesting. You had a shareholder meeting, a lot in person, but some people Zooming in. So we're still figuring it out.
Yeah.
One thing that kind of stands out to me is the stat that the average VC relationship with a startup lasts longer than the average marriage. And so from the same, it is depressing.
That's a different panel meeting. Sorry.
But to Don's point, there is this like concept of like the grab a beer test. You're going into business with these people, or you're giving equity of your company away. So speaking from the founder perspective, you're thinking about it from the other side of the table. It's the same concept. You don't want to spend time with someone that you don't want to grab a beer with, and insert coffee or kombucha or whatever your beverage choice is. Frankly, I feel like I can feel that more on Zoom, because like in person, you just get some general good energy from being in person with anybody. On Zoom, you really gotta click.
Yeah.
To want to be on Zoom longer, in my personal experience. But I think that's really interesting, and we'll start to see a lot coming from that.
Yeah. Well, I'll open it up as well. I have a few more questions, but does anybody? You got a couple VCs here. Anybody looking for cash? Any questions? No questions? Yes.
Well, on the other side of the pipeline, the investable companies, right? What can we do to either educate or train companies, founders that have good ideas on how to be an investable company? Or do we just wait for them to get to the point where you'll find them?
Well, I would. That's a great question. One of the things that Elevate's doing through our Nexus program that Jacob Schbach and Landon run throughout the state is trying to connect with young people with ideas to solve a problem early, where they come in and they've got the idea, but they really have nothing else, and it's taking them through a process, kind of like a mini accelerator, to flesh out to determine if they even have an idea. And then if they do, then connecting them with either more advanced accelerators or some funding mechanisms to encourage them along the way. But you bring up a good point. I think one of the biggest hurdles in Indiana to innovation and entrepreneurship is talent. And I think we have a big problem with talent in our state that doesn't have a solution yet. I think there's a lot of efforts going to try to solve it, but we're back in 1980 in terms of the progression. We've got a lot of work to do to encourage talent, identify the talent, get the kind of assistance to them to determine whether or not they've got an idea, and then how to support them and grow as they take on more people and build a company. So I'm not sure if that answers your question, but it's one way of trying to tackle that issue. There may be others here.
It's getting better, and it's kind of hard to see like in a snapshot in time, but I'm watching universities actually try to teach this. So they're getting, it's different than experiencing it. The more companies that are funded and growing, which is 10x the number when I first got here, they're learning on the job. Brent's training younger employees sort of what it looks like and feels like to start and grow a business, what it feels like to be scrappy, what it feels like to do 3 jobs at once, what it feels like to do a job you've never done before because you have to, right? G-Beta, wonderful program. I love watching the stuff that comes out of G-Beta. It's our lifeblood, right?
I have one more to end the segment on, and we have 3 people raising capital here, so it'll be interesting, I think, to hear. We understand what it takes. You have a lot of LPs. You go out, Don. You also have to raise money. Elevate's got to bring in money. All of those things have to take place. What is it going to take to be able to bring in enough? What does enough capital or enough things look like for Indiana to be able to start having more money for that next step, that later round? What does that look like? What do we have to get to?
But I was going to quickly say that we often forget that when you look at the semiconductor industry, or to Senator Young's point, when you look at like NASA and you look at the research triangle and you look at all these things, a lot of this was seeded by government. I believe that Indiana's got to invest more, a lot more than what it's currently doing. So that's step one. Right now, Indiana's putting about $30 million a year into the 21 fund, which is used for multiple purposes. It needs to be at least 100, at least 100. Kind of going back to my original comment, if you looked at the kind of the investment community 10 years ago, there wasn't a lot. I mean, there were a few players that were early that came in and have been in the trenches building, and by the way, having a great deal of success, I know for a fact. But anyway, the point I'm making is that now you're seeing more and more people get in at the early stages of investment. Now we need to do the same thing for later stage. Indiana's going to have to step up and help with some later stage investing, which is going to attract and encourage more private sector operators and investors to get in and follow on. But what is really going to drive it, Brent, is going to be we have to have a bigger pipeline of later stage deals. And as we build that bigger pipeline of later stage deals, I think with more state funding and more private sector support, we'll keep headquarters here much longer. We'll keep our high skill, high wage jobs. We'll keep wealth here and turning in the community. Those are critical things yet to be achieved by Indiana, but we're on the path. Again, I have to tell you, I'm like super bullish that we're moving in the right direction.
Yeah, if I could build on that, we cannot be passive and we have to be patient, because the programs that are in effect now are working, but we need to do more. There's not an Indiana company that I look at to potentially invest $3, $4, $5 million in that I can't look at the cap table and I can see the venture capital tax credit at work, right? And I can see, in many cases, an early bet by Elevate, right? That company would not exist but for that. And then we do the first institutional round after an Elevate, and it can get to something that, like you're now looking at larger, later stage deals. That happens throughout. And if you have any question around the impact of the next level fund, just pick a couple, Allos and High Alpha. Look at the Indiana companies that have been funded since that program was put in place. That's part of every one of those companies, right?
Yep.
I will tell you, Allos 3 got up and running earlier and is bigger because of that program. But we can't stop there. So, right.
Perfect. Well, we are at time, and thank you all for hanging with us and for the last panel of the day. And thank you, guys. Appreciate the talk.
Good job.
Yeah.